Well, good Wednesday afternoon or Wednesday morning to you today. We're welcome to Trading Index Options. I'm Connie Hill. I'm sitting in for Ben Watson today. Ben is probably taking some well-deserved time off and asked me to cover this class for him, which I'm happy to do so. Do you suppose that in our short time that we have together here today, that we could see time decay in a meaningful way? Do you think we could see that before our very eyes? Well, I'm going to do an experiment today. If it doesn't work, Ben will say, don't teach my class ever again. But hopefully this experiment will work where we can just see that happen before our very eyes. I am joined in the chat by Cameron May. I'm so glad Cameron's here. Great coach, friend, trader of the markets for years and years. As you have comments, go ahead, chat those in. Cameron will keep his eye on the chat, as will I. And he'll get to some of the questions maybe that I can't quite get to, or maybe a little bit off topic. Okay, so but feel free to send those in. And those of you who are listening to this on the recording, and I know there are lots of you that do, when you have questions, go ahead and put them in the comments section of YouTube. Because as coaches, we go back, we review those every day so that we can get your questions answered quickly as well. All right, hope you're following us on X. I'm Connie Hill CS. Cameron is Cameron May CS, and we'll post educational content on our X account throughout the day. You know, many times we'll notice things about charts or something in the news that we think might be interesting for us. Then if we're interested in it, we think you might be interested in it too. So we'll share that with you. Let's go through our disclosures and lay out what we're going to talk about here today. What we discuss is for information and educational purposes only. Don't consider it a recommendation. Past performance is no guarantee of future results. When we're talking about trades here today, we're not going to include fees and commissions in it. So we're just going to take the straight value of it, although you would want to make sure that you're aware of what those fees and commissions might be. We are mainly going to work with European style options here today, which you need to know the difference between that and an American. You can be assigned at any time. However, with European options, and this is one of the draws to it, is that they do not expire early and can't be assigned early. Okay, so typically we want to be aware of that. Improbabilities, if we talk about the probability of something, keep in mind it's theoretical in nature and not guaranteed. We are going to be using the Paper Money software application here today. That's what you download to your computer. It's the most robust version of Thinkorswim. It has lots of nice features for option traders. Now, this morning we're going to take a look at, do some general discussion of index options. And the aspect I really want to dwell on today is time decay in theta. All right, and then we're going to be looking at some different examples here. Now, I'm going to start us out. We're going to jump over to the SPX. We are going to look at these indexes in detail, but I want to do something right here at the beginning. All right, and what I want to do is determine and put on a call spread and a put spread that expire today. And I want to see if we can see time decay before our eyes. Okay, so we're going to just kind of jump into it from that aspect, and then we're going to check on these spreads that we put together here. So over to the trade tab, and we're going to open up the July 2s, so they expire at the end of the day. And, you know, I'm going to go with my chart. We're not really going to be looking at doing very short-term trades necessarily here, but I do want to look at maybe a range where we think maybe the S&P wouldn't necessarily get to today. So I have a 1-minute chart up here, right? And I've got a few moving averages, which maybe kind of ignore them for right now, okay? I'm going to kind of scrunch down the price. And where do you suppose it might be that maybe the SPX wouldn't get to very soon? Okay, very soon meaning today sometime. All right, because we're fixing those couple of verticals we're going to put together. I mean, is 60-15 a safe area? You think maybe 60-20 might be a safe area? It hasn't really gone quite above that. Sometimes it's helpful to see in the last 5 days maybe how high the index has gone. If that were the case, yeah, we might be looking at, 62.30. That might be a little bit of a ways away. But let's come back here to our 1 day, 1 minute. And actually, I'll go 2 days and 1 minute. Let's come out to our trade tab. Now, as we look at this, we're going to maybe take a look at the delta column. These are the columns I typically have open on my Thinkorswim. We've got the delta, open interest. The probability here is expiring out of the money. And then we have a theoretical price. All right, some of you are giving me some ideas here about where do you think maybe it might not go to. Thank you, I appreciate that. So Bruce is saying 62.14, which is maybe about here. Okay. Martin says 62.20, so a little further away up in this area. Yeah. And this is just kind of a discussion. It's not cut in stone. But if we were to look at, say, a short put vertical or a short call vertical, okay, we were looking at the top edge there. One of those was 62.20 from Martin. Let's see if we go out to 62.20, what the delta is on that. Okay, the delta right now is about a 38. And the probability of it expiring out of the money by the options expiration today looks like it's in the neighborhood of about 63, 64%. Okay. What if we went out even a little further? What if we went out to, say, the 62.30? That's even 10 more points away. We're going to construct here. We're going to do a short call vertical. And I'm just going to say sell the vertical here. And I'm going to spread it out a little bit. Okay. Obviously, it starts out here at the $5, but let's make this one a 62.40 and spread it out so we have a $10 wide spread. And I'm going to kind of lock this here for the moment. So we're going to say, okay, this spread right now, if we're to put that in, might feel in the neighborhood of about 90 cents. Okay, so that is on the call spread. We're just going to do some tracking here. Now we're going to quickly put together a similar put spread, okay? And this one was using the 16 delta. So let's see if we can see something maybe 16, 17, 18 delta-ish. So way out of the money on the put side of things. And if we scroll up here, we could do a 61.90, which is an 18 delta. That's the kind of close. A 61.85 is a 14 delta. Let's go look where 61.90, 61.85 are. Okay, so 61.90 is below the 200 period moving average. And these are now minutes, right? So it's kind of down in this neighborhood down here, of which it went to earlier in the day, but has since climbed up here a little bit. Let's go ahead with this. Let's choose the 61.90. And we're going to do the same thing. We're going to sell a vertical. We're going to spread it out. We've got our 61.90. Let's make this one 61.80 for a little bit wider. Now I'm just going to lock that in for a moment. I'm going to put in what that value is. And what we're going to do, we're going to construct some other trades here and have some discussion. But we're going to kind of check back on this throughout our morning here together and see if we can see time decay before our eyes. I come over here on the, so that we can go and change our column structure here in the options. Let's come down to delta, gamma, theta, vega. Okay. Now, if we have options that are expiring today and they're out of the money, do you suppose maybe all of it is time? Yeah, all of it is time. So we come down here, a theta decay, and we can see, say, for example, the 62.20. The premium here is 430 by 440, and 430, pretty much all of it is what? That's how much theta decay we're expecting to have today. All right, so right now we're expecting about 160, 163, whatever it happened to be right there. Okay, which is essentially, you come over here and you're like, yeah, that's basically the premium, right? That time value. All right, we're going to watch this. Now, you probably are familiar with the idea of how time value works. I hope you all are. If you're not, one thing that you could do is to go to Getting Started with Options. Cameron May, he's out here in the chat right now. Cameron teaches that class about getting started with various option strategies. And he'll go through, some of the real basic calls and puts and go, through the Greeks. What do each of those Greeks mean? And we know that theta is letting us know how much time decay is likely to deplete based upon the time from expiration. And so this, I'm going to draw. I'm not a good drawer, okay, you guys? So I'm not a good drawer, but I am going to attempt to draw here for a minute. So we're going to just have a little graph here. And out here, I'm just going to kind of put an X in terms of the time to options expiration. More time is here, less time is out here. So maybe I'm not going to draw M. And then over here might be the value. And then what we might see is as the option gets closer to options expiration date, we expect the value of that to continue to go down, down, down. So it really becomes quite a benefit if you are a seller of options, right? And the closer we get to this options expiration date, the more quickly that time decays. In my mind, I always kind of think of it as an ice cube. Ice cubes, first comes out of the freezer, it's kind of solid and not melty, and it sits out in the air for just a little bit of time, and it starts to melt. We can see that. That's what we're hoping to observe over here with those two spreads that we're just kind of looking at. All right. Next up. Oh my goodness. All right. Looks like we have a survey out in the chat. You guys know from time to time, we will put out a survey. I don't control it, nor does Cameron, but it is put out there by some folks that are working with our sessions here. And it's just to kind of gauge your pulse, right? How a particular session might be going. And so there's just two questions on a scale of 1 to 10. 1 is the lowest, 10 is the highest. You just pop in the radio button what your feelings are, okay? And then there's 2 questions you can answer if you would like to. And in my sessions, typically I'll encourage you to say, if there's something you want to communicate to the instructor, go ahead and write it in those fields as well. You don't have to actually answer whatever that question is. You can use it for that purpose. And if there's something you might want to convey to me or want to convey to Ben, send that in. I'll share that information with him. And I like to include things like, is there something you're struggling with? Is there something that would be helpful if we would include it in an upcoming series, or maybe a step you're struggling with? Let us know so we can help you answer those questions. Okay, so use that opportunity to do that here as well. All right, Cameron, thanks so much. He posted out there a playlist for his series on getting started with options. Ricebird, you commented on my drawing skills. Thank you, Ricebird, because honestly, I am not a good artist. I'm good at stick figures, and that's about it. All right, let's carry on here. Let's take a look. We're just going to observe this guy here. Let's come over back out to our SPX. Let's come out to, let's just say a 3-month chart. So we're looking at it. Actually, maybe 6 months might be a little bit better here. Hopefully you guys are pretty familiar in keeping tabs on what the indexers are doing. In this class, we're really kind of focusing on the bigger picture as far as using an index, right? And so with the SPX, you should know, man, the SPX and the NASDAQ have just been putting in high after high after high, right? Keeps grinding away. So 2 days ago, put in another all-time high. We see that at 62.15 on the SPX. And I have some moving averages on here, and it's above all the moving averages, right? Green is actually 200. This gray is a 100. Red is a 30. Blue is a 10. And so, the last few days, it's been trending well above that 10-period moving average. And so some people might say, well, let's maybe focus on more bullish type strategies. On the NDX, the NASDAQ has been doing the same thing, just similar to the Dow, in that it put in a new all-time high here as well a couple of days ago, that 2,271 is the peak here on the NASDAQ. And again, it's above its moving averages. And if we kind of zoom in here today, yesterday we had a little pullback in the market. And it doesn't look like it's amounting to a whole lot today, because today's candle really, if we looked at it right now as a bullish engulfing candle, we don't know that it's going to close there or look like that at the close of the day. But for right now, it's kind of saying, yeah, it's wiping out basically the losses that were put in yesterday, and a continuation of the rally. All right. Let's look at the volatility index for a moment. Now, volatility, we could trade volatility if we wanted to, but just the idea that it's kind of in the lower territory, right? So maybe premiums associated with the VIX right now might not be all that juicy because volatility is so low. And we can see here in just the last few days, it's back here. It's under 18, right? It's been in the 16 and 17s here recently, which is kind of in the lower range of where it's been this year. If I come back here to say, what is this, February and January back here, it was in, say, like 14, 13 area. So a little bit lower where it is now, but just relatively low. All right. Well, one of those kind of conditions, yeah, we're going to see some bullishness in the markets. Now, we're going to put together a trade here. Let's come on back. We're going to go to the SPX. And for the fun of it, let's see what the value is now of our put spread. I locked it in at 75, and I'm going to come over here to the unlock. And all right now, well, 80, 75. So it is, I'm going to say, mostly unchanged. Okay, so on that, I'm going to put this in. I'm going to put it in at 80 cents. That's what it is right this second. And that is on the put spread. Got to put the call spread back in there, and I didn't record the strike prices we did there. Let's see if this one still works. Let's go. I'm on the wrong thing. That's what the problem is. All right, SPX. All right, on the SPX, this is still accurate, okay, for that put spread, 75.80, so not very much changed. Actually, I'm going to do something. I'm just going to go ahead and submit this for the moment. That might be an easier way for us to track this. And then let's put our call spread together here. We ended up doing, I believe, the 62, I think we did 62.30, 62, let's put that out here. I think we did 62.30, and I think we spread it out by 10 bucks. All right, if I'm wrong, you guys correct me, but I believe that's what we did. 62.30, 62.40 down here. All right, what's it coming in at right now? Okay, it's coming in about, 70 cents. I'm going to submit this as well, just because it's going to be easier for us to track that way. All right, so right now, that I'm going to go with 75 cents. So had we done it right when I showed you the spread, we would have collected 90 cents and 75 cents on the put spread. Now, the call spread is worth about 75 cents. So we've seen a little bit of time decay, and not as much on the put side. So the index is heading up a little bit. 62.30, 62.40. Thank you, Frankie, for making sure I selected the right ones. Appreciate that. Okay, what if we were going to put together this, we're going to kind of watch this one that has 0 days to expiration, because I wanted to do that experiment of watching timeout. But if we were constructing maybe a trade for our class portfolio, we're a little bit more bearish or bullish because we looked at the markets, what they're doing. We might do something maybe a little bit more traditional if we were going to put together a put spread or call spread. But let's focus on the put side of things. Let's go out to July 25. Let's make sure these are the right options. They have about 23 days before they expire. You guys know many times sellers of spreads and buyers of spread like to work with a ballpark range of, say, 20 to 40 to 50 days worth of time. And so on these index options, man, we have plenty of choices here. Now, I'm going to change my columns back here. I'm going to change them back to our this column set, although I didn't necessarily want implied volatility. So I'm going to take this. Let's do this. Let's make it a custom. And I'm just going to get rid of this one just because it takes up a little bit of room and we don't have a ton of room to work with. Okay. Now we can see what our open interest is for some of those contracts and what our probabilities are. So we might go out to 23 days worth of time. I picked July 25th. Why did I pick July 25th? Because it's Ben's birthday, you guys. Ben's birthday is on July 25th. So in honor of him, even though he's not here today, we are going to do the July 25s. All right. Out we go. When his birthday comes up in a couple of weeks, you can wish him a happy birthday. Now, looking here a little bit further out of the money, we might look at something like, you know, a 30-something delta. We've got a 38, a 36, a 34, a 32, a 31, a 30, even a 28. Sometimes we might go into the higher 20 deltas, right? So as we look at it here, we're going to be needing to pay a great deal of attention to open interest because, say, this 30 delta only has 7 contracts. We don't want to be trading in there, right? We want to be where there are contracts. So let's go here. 1730 is nice, and maybe we spread this out a little bit here. Let's go. That's going to be 6,300, and we're going to say sell vertical. And then let's see how much we need to pull back here to have some decent open interest. I mean, we could do the 63.25, spread it out by $25, so we have, say, almost 1,000 contracts here. We wouldn't be in bad shape here with 188 contracts. We're just doing, say, 1 contract here. So let's do that. Let's go with our 60. Let's see, that turns out to be 63.20. So we'll go 63.20. I guess it is that wide. I was thinking it might be 5 wide, but it's not. At this point, it's 10 wide. So yeah, we're going to have to do that. It's going to be a $20 wide spread. And I need to change this to a sell because technically we're trying to possibly sell that. Let's look on the put side of things, right? Market technically is a little bit more on the bullish side of things, actually. So let's see up here which ones I was looking at. And maybe this will make a little bit more sense. 30-somethings. What have we got? 37, 38, 39, 32, 31. Let's come out here. Let's go with this 30 delta here. That's going to put it at 61.10. Where is 61.10? Well, 61.10 is about... there's 61.13. It's in the area of my mouse. It's in the area of this 10 moving average. Okay, that's where that is. So at this point, it's kind of like, yeah, that is a little ways out of the money from where the SPX is right now. So let's put that on. We're going to go at 61.10, didn't I? Let's do 61.10 and 6,100. Okay, so 61.10. Let's change this to 6,100. And in a $10 wide spread, this would, you know, be a ballpark of credit that we might have in there. Now, is this something that is acceptable to us? Is that a good enough credit on an index spread, do you suppose, on a short vertical? You know, one of the advantages of using the indexes is the idea that there are so many choices, and many times, especially when it's closer to options expiration day, open interest is fabulous, right? This one is a little bit lighter, but again, it's Ben's birthday. The market, you know, people don't know it's Ben's birthday. They don't know they're supposed to be celebrating by using some of those contracts. All right, but 220, let's just do our quick calculator here. If we have 220, which is our max theoretical gain on this, not going to get any higher as long as we keep that spread together. So 220, take $10 from that, it's going to give us what? 780, right? So 7.8 is our max theoretical loss. 220 is be our max theoretical gain. And so let's see what that computes to. So 2.2 divided by 7.8, about a 28% return. All right, on that one. Now, each of you probably will have an opinion. This is worthwhile to you or not, that kind of a return. With 23 days left, something that some people will look at is, am I getting at least 1% a day for what's left? Or for what the return is. Okay, in this case, we'd be saying, okay, we want to get at least a 23% return because there's 23 days left before it expires. Not that we're planning to hang out until options expiration day, because if we can get out sooner with a chunk of it, that's going to be our plan. Okay, but so some people say, yeah, that's acceptable. I can do that. Wiley's thinking, hey, maybe if we put some new fibs on 6110, is that a fib level? Ooh, that would be interesting to take a look at, wouldn't it? Yeah. Yeah, and Vic, thank you for correcting me there. Yeah, we're looking at being the seller on that. I initially put it in finger slip, grabbing a buy instead of a sell. All right. Let's put in to buy a chunk of this back. Let's put in a first trigger sequential. And on here, if I just go ahead and hit confirm and send, I want to show you what our buying power effect is. So 780, so a little bit less than $1,000. Could somebody in a smaller account still do index options, do you suppose? You know, Barb teaches trading in a smaller account. I'm going to say, yeah, they could potentially do that. They wouldn't probably want to load up on the contracts like 10 contracts at a time. That would tie up a lot of margin in a smaller account. All right, let's go ahead. If we get a chunk of 220, and let's suppose a chunk of that is 70%, that would mean 30% is less. So if we go 30% times our 220, let's go buy it back at 16 cents. So we'll create an opposite order here. And we'll just go ahead and put it in here for 66 cents and let the system catch it for us, right? Let the platform do the work. If it goes to that area, even if it's for a small period of time, go ahead. Let's buy it back, be done with our obligation. All right, let's go ahead. We're going to hit this and confirm and send. Camilo says, you know, I'm using ETFs instead. Which we don't get into ETFs in this session. I do teach a session on Monday. We get into ETFs. That's what everything is all about. Friday mornings, we have an ETF session as well with Kevin Horner and James Boyd on Friday mornings that is geared towards using ETFs as well. We can't record those sessions. We can't repost them. So you've got to be there live to catch those. But Camilla, I'd say that's entirely appropriate for you to be able to do that, and obviously looking for liquidity in those as well. Now, Han says, you know, what's a good number of contracts that we should be buying or selling? It's just going to depend on your risk tolerance and your portfolio size. In our portfolio, oh, good, we got filled on our class portfolio and in the classes that I teach, many times I'll use this. I'll say we've got a $150,000 portfolio and we only want to risk 1%. So we don't want to risk more than $1,500 per trade, okay? That's for that size account, and that's for the rules that we're using there. But, you know, say if you have, you know, a $300,000 account, you know, you could use this as well. That would be like a 0.5%, right? The 1,500. If you have a smaller account, you're going to want to keep it on the smaller size of that. So it really is going to be dependent on your account size and the risk you're willing to take. And you know, suggestions, this goes back to getting started with stock investing, is not risking more than 1 to 0.5% of your account in any trade. I think with a smaller account, you have to massage it a little bit. You might have to take on a little bit more risk to make that really be feasible to really trade that way. But that's kind of what we're gearing for. We don't, you know, if we have 3 or 4 trades go wrong on us, we don't want it killing our account, right? Not that we want 3 or 4 bad trades in a row, but say big news comes out, the market changes, and you kind of hit a bad scenario, right? We want to make sure it's just a really small portion. All right. Bruce says, will there be the interest, where will be the interest between 61 or 6,300, 1 ATR, 2 ATR? You certainly could do that as far as a target, right? Looking at average true range. We'll take a look at that real briefly, and then we're going to go take a look at our spread that we're trying to watch decay. Yeah, thank you, Wiley. Wiley says, if you go and do the online courses, it really helps your learning curve. Absolutely true. Just because somebody asked for it, let's go ahead. Let's add the ATR here. Let's see how much on average. And this is just kind of, you don't have to use this for your rules necessarily, but this is something I think is helpful to see, is it moving a lot or is it moving a little? We looked at the volatility earlier. We saw volatility is fairly low on the VIX. And it's going to be reflected in the index as well, in the sense that we're not having big, huge ranges, right? If we're having big, huge ranges, that number moves up. If we're having real small, tiny ranges, then yeah, that ATR is going to go down. And so it looks like right now, if I put my mouse on it, looks like it's 59.76. So maybe about 60 points a day from the peak to from the highest point to the lowest point. It's about 60. And so, yes, you could, if you wanted to, you could say, I want to make it an ATR trade, look for 2 times the ATR or whatever you want to do. You could do that. With short verticals that we're focusing on here today, it's some people like to trade it with a probabilities type of approach as opposed to a technical approach, okay? Which ATR could kind of fall in that realm, using identifiers on the chart that help us identify some targets. But we're kind of focusing on, hey, let's see if we can get theta to work in our favor. Let's see if we can watch the ice cube decay and melt and use that to a seller's advantage. Okay, we're going to head back here. We're going to go back to, well, actually, let's see. We submitted that. Let's come back to our unallocated, and this is where our SPX should be showing up here now. So let's look at we want to look at the July 2nds. Okay, so up here's the put spread. Looks like we did get filled on the put spread at 80, even though we started here at 90, or rather 75, but we got filled at 80. Right now, it looks like the price is about worth 67. Okay, so 67 on the put. Let's go back here. Should actually do the call first. Let's look at the call first. We said it was starting about 75, and now it's at 85. So are we seeing a decay there? We're not seeing a decay there. We're actually seeing it go up as far as the value of that. But that also tips us to the idea that maybe it's moving up a little bit right now as opposed to moving down. If we're moving down right now, we'd probably see maybe a little bit more shrinkage in the price of the call spread. But on the put spread, let's mark it down here. Looks like the mark price now is about 60 cents, okay, on that put spread. All right, started at 75, it went up a little bit to 80, now it's down to 60. So we're seeing essentially, if we had put this trade on and we're using real dollars, we've seen a capture or time decay of about $15 in our time here today. All right. John says, I missed how those were grouped. Is that the setting by group? I did have some different groups on here for some of my different classes. So we do short verticals, so I'll keep track of my bulls and my bears there. And really, it's easy to create a group if you want. We could create a group with this and call it index options if we wanted, right? Just highlight whatever the trade is that you want to move to a group or create a group for, right? And then you can say move to group. If it's not one of those groups and you want to create a new one, you just select on add group, give it a good name. That trade will go into that group, and then you can start moving whatever trade you want into that group. All right, we didn't really cover that, okay? I didn't teach you that per se earlier. You didn't miss anything on that. Okay, John? All right. Let's do this. Let's take a look at something else here. What if you, maybe you're trading options, you're like, man, those numbers are kind of big. Maybe you're not as comfortable with the full index. Maybe we could use a micro, okay? So let's come down here and let's construct together here. Let's go XSP, which is basically much smaller version, same index, based on, I should say, based on the same index, but instead of it being 6,500 whatever or 6,200 whatever, where it's just 621. But you can see the pattern looks very similar to what we were seeing on the SPX. So let's maybe work with some smaller numbers here. Now, I had to bring up 70 strike prices here in order for us to be able to see enough here. But let's not do July 2nd. Let's go out here to, I was toying around with the July 25s. Let's see if the way that it's shifted right now, if we have enough open interest to kind of do this, is not as big as I would like to see. But if you were doing one contract, typically we don't want to be more than 2% of the open interest. So that would mean look for at least 50 contracts, okay, if we're just going to do one. So there's some out here we could use with the expectation that maybe over the next period of time it might go up. Now that's actually just the fives. Let's come down here to the July 25s for Ben's birthday. All right, we're just going to go with Ben's birthday today. What if we did something like, there's some open interest here. Think maybe somebody's doing a spread here, 390 in the 629, 390 in the 632. Maybe, we don't know for sure, but that's where the open interest is right now, okay? So we're going to go ahead and let's take a look at 629 and actually, no, let's not. Let's take a look on the put side again. I apologize. Where's our 30-something delta? 30-something delta and 20-something delta here there's just not enough to work with. I think I was noticing that 390 earlier, and I forgot we're going to be more focusing on the put side of things. So what might be more liquid? Sometimes you have to poke around a little bit. This is probably light enough that we wouldn't be super interested in it unless we could maybe get a 50, get at least 50 contracts. If we did this, we might have to go like 610 and 605. So $5 wide, that's not bad. Let's take a look at that. Let's go 610 and change it to 605. Oops. There we go. All right. Now, interestingly enough, is a $1 credit on a $5 wide spread. What's that return going to look like? Okay, it's 29 days. So if we take our max theoretical gain of $1, divide that by our max theoretical loss of $4, that's going to give us a 25% return. So some people might be okay with it. Some people that would like a percentage per day left in the till options expiration might go, that's a little bit low for them, okay? In the case here, because we do have some open interest here of about at least 50 contracts to do one, we're going to go ahead and stick with it, but I just want you to know, for some people, it might not meet their criteria, right? They might not. All right. Let's go ahead. We're going to submit this one. We're going to send it out there. And with 29 days options expiration, then time decay theta should not be quite as heavy on it, right? Because we know it's not right at options expiration day at the end of the day, like the one that we're kind of watching melt. But let's go ahead. We're going to send this in. Now, what about the Russell? In fact, somebody I think out here said, Bruce said, hey, let's look at the Russell. And that's one actually I wanted to take a look at here. Russell 2000 has not been quite as robust as the SPX and the NDX, right? It's definitely upward trending, but it's not putting in the new highs. That back there. It's not putting in the new highs like what we're seeing on those other two indexes. Nonetheless, it is moving. It's still upward trending, and so some people might be focused more bullishly. It too is above all those moving averages. Okay, so just like all of them typically are above the 10, so here is the Russell. Let's look on the put side of it. Let's see if the ones I had targeted earlier. Oh, actually, we got to go do our check. All right, let's go check our price, then we'll look at the Russell. All right, we're going to come back to the monitor tab. We're going to come back here. All right, on our put spread, the time decay, or the value of it, that says 57 cents. I'm going to come over here. So it's a little bit lower than 60 now. Oh, look at that, 0.55. All right, what about the call spread here? On the call spread, it's gone up a little bit, okay? Well, what is that going to mean to us? When it goes the direction you don't want to see, it's harder to see the time decay, okay? It's harder to see it because the value is going up. So we start at 90 cents. Now it's a 102, okay? So a little bit harder to see the time decay element. If it's going the direction you would like it to go, it's easier to see that decay as well as getting that benefit of the move of what the price of the index is actually doing. All right. Well, this was our experiment today, and it was not as wonderful as I hoped that it was, but you can get the sense of it. If you were like, yeah, I want to kind of see how time decays, how that could happen. There's a lot of buzz these days about 0 days to options expiration. You know, Ben's taught a few classes on him. He's a great one to listen to for it. But that is kind of the full focus of it, is that time decay. Now, you guys, I hope you're a subscriber. Are you guys all subscribers to our Trader Talks channel? I sure hope so. When you are, it makes it a whole lot easier to find our content. I'm just going to drag this one over here and come up here. You can see our playlist that we have for each of our classes. We've started some new sections here, okay, that I want to make you aware of. Of course, we have our upcoming stream. So up next is going to be, Brent's going to be teaching managing an options portfolio. But we have some what are called bite-sized contents, so little short videos. I'm doing a series here on doing some things with your Thinkorswim platform, showing you how to do it for those of you that are really new to the platform. This one I want to point out to you here, if you are new to the platform, that Cameron has this series right now as well. If you're new to the Thinkorswim platform, start here, okay? And he walks you through some of the most basic things that you're learning to do on the Thinkorswim platform that are things you want to know how to do. So take note of these. These might be some that might be helpful to you when you're that subscriber. It's easy to see, so just click on that little blue YouTube logo in the bottom right-hand corner that says subscribe on it. Now, my time is up here. I've got to be signing off, but do appreciate your contributions here today. Appreciate, you know, some of the things that you brought into the discussion, like let's look at this, and maybe we could use a Fibonacci and some other things of that nature. My intent today was so that we could sort of see time melt in a small period of time. I think we've actually seen that. Let's see here. I'm just curious. Yeah, our one that started here, our call spread. Yeah, it's still going against us here a little bit. That's all right. If you have the inclination to do so, we always appreciate your feedback when you fill out the survey for us. I read everything you submit. If you have some comments you want me to pass on to Ben, I'm happy to pass on to Ben. Those things that you might be struggling with, or things you'd love to have us attack in one of these next upcoming sessions for index options. All right, you guys take a little break. We'll see you back here. Follow us on X. If this was helpful to you today, go ahead and hit the like button. And then we've got that survey for you out there today. giving you the opportunity to leave us some feedback, which we always appreciate. And it's an easy survey. All right. We'll see you in 15 minutes up at the top of the hour. Thanks, everyone. Bye-bye.